Hey, this is Felix, commercial real estate broker based here in Houston, Texas. And today I want to talk about interest rates and its effects on commercial real estate, but more specifically, its effects in industrial real estate here in Houston. So earlier this week, the Federal Reserve had its first meeting of 2023 where they announced an increase of interest rates, the federal funds rate of 25 basis points, so 0.25%. So the federal funds rate is a rate at which banks lend money to each other. And this is important because coming in from last year, in 2022, the Federal Reserve actually raised rates a total number of 7 times. 3 of those being 75 basis points raises and 4 times being 50 basis point raises. So to put it into a bigger picture, right now, the federal funds rate sits at between 4.5% to 4.75%, whereas 12 months ago, before the whole plan to decrease inflation started happening, we were sitting at 0.25%. So this is actually a big difference in magnitude, and it's affected commercial real estate or real estate in general because of the fact that it's an industry so sensitive to interest rates. We can see that this has been a plan from the Federal Reserve to try and slow down the inflation in the economy. Whereas, sometime during June of last year, we saw a high of 9.1% year-over-year inflation rate on their CPI. And this year, as of right now, we are currently sitting at 6.5% year-over-year inflation. So the hike in interest rates has been mildly successful in decreasing inflation rate. However, per the Federal Reserve, we're still on track to the diminishing rate that they target, which is roughly 5.1 CPI index towards the end of the year. So this has actually affected a little more the general commercial real estate sphere, but where it comes to industrial real estate, especially here in Houston, it has actually remained pretty strong, even though these changes have happened. And this is because large demands in both the manufacturing sector and logistics sectors here in Houston, at least. So one of the things that happened here in Houston is that industrial real estate transactions last year, the last 12 months, decreased roughly 22% from the year prior. And at first glance, it seems like a very alarming rate, but what you don't see is that 2021 was a record year for industrial real estate, and the year following that, in terms of records, was 2022. So 2022, even though we had a decrease in 22% of transactions, it still sits at number 2 in terms of timeline. So this year was still a very good year for industrial real estate, which also can show that this remains a very strong choice in front of adversity, making a really good market to invest in. So now, whereas for this year, since money has become more expensive to borrow, liquidity and having cash in the account in order to invest will prove to be a very successful tool or a very helpful tool in negotiations over this coming year. And those people that take the willingness to invest during these times, I'm sure they will see a reward at the end of the cycle. So I hope you guys liked it. Thank you so much for watching. Really appreciate your time.